Well, Eric last night told us that we might get a 15% correction in the U.S. stock market, and boom, it's starting. So maybe we'll have to follow that and see if his 10 to 15% correction comes up. Anyway, good morning, ladies and gentlemen. I'm very happy to be here again in front of you to present to you. And the subject today is forget the noise and enjoy the gold bull market. So I'll give two examples of noise because we're always concentrating on the wrong things. And I'll give you two examples of noise. And then we'll go to what I believe is the confirmation that we are in the bull market in terms of fundamentals, in terms of sentiment, and then a little technical analysis. And then we'll go to what's really important, which is the stock picking. And I tell you, so I was at PDAC. This is the biggest world mining show. There is 24,000 people attending. And I tell you, it's much nicer to be in a smaller group because your average length of when you talk to somebody over there, the average length of the conversation is about 30 seconds. So sometimes it's enough to exchange a stock tip, but here you get to know the CEOs much better. You can have coffee with them, and it's a really, really nice atmosphere. So noise, I'll give two examples. One is Brexit. I was asked to talk on Brexit. So it was a 25-minute talk on Brexit, and today you'll have the 5-minute pitch telling to you that concentrate on what's really important, meeting the companies here, and not worrying too much about the noise. So this was my little fun video. It'll be for another time. So I had a lot about the history, because if you want to understand the subject, you have to dig in. You have to go through the history. It all started in 1918 with Lou Weiss and the pacifist movement. 42, Winston Churchill was talking about the United States of Europe. The two ground ideas on the EU foundation is to restore to Europe peace and power. Ensued European economic miracle. Now it's 28 countries. It's 6.7% of world population, which is more than the US and Japan. The GDP of Europe is huge. It is above that of the US and probably equal to China. Maybe now China is a bit higher. You've had spectacular growth in real average income. For the lowest 90% earners, their average income has increased 250% in France, 250% in Germany, and only 70% in the US. So that was probably the catching up after World War II. The EU is #1 in world trade. It is the largest consumer market. And UK is also extremely important versus Europe. The figures speaks for themselves. 12.6% of EU population, 17% of EU GDP. The growth rate is higher in the UK than in Europe. This is probably why they want to get out. When they wanted to get in, it was Europe was more tempting. UK unemployment is low, 5% versus 9%, and of course they have huge export and imports with the other EU countries. UK contributes 11% of the EU budget, and before the vote, there was fear mongering. So the Treasury study was claiming that the economy would shrink by 6%, costing every household £4,300 a year. So basically, that was the attitude. The poor British women believed that their car would not work in the next morning after Brexit. That's what was expected, and what happened. 9 months later, you have a stronger UK economy. The UK stock exchange is up 15%. The housing is at an all-time high. UK unemployment is down. Business confidence is at the highest level in 18 months. Inflation is up. So the only real difference is that the pound is down. Now, did Brexit change anything? No. The secular trend in the pound bear market is still intact. So now, versus the dollar, it's been going down. Oops, nope. So Brexit is useful because you can lose a few pounds. Oh, there's a little hand here. Oh, there it is. Okay, so the stock market went down 10% intraday, but since it's up 17%. So Brexit did not change the secular trend of the FTSE bull market. So we can go on and on. You see, if we dig in, we want to know, what are the positioning. So the UK, they want Brexit. Brexit means Brexit. In the EU, you have the opposite. Hollande says, well, Britain must pay the price so nobody else will ever dream of leaving Europe. So we can go on and on. This is what I believe noise. I went to school with this guy. He'll be negotiating. And he's never really worked a lot in his life. When we were together at my business school, he didn't show up very often because he was already involved in politics. On the other side, you have Theresa May. So this is Brexit. Wonderful transition to Trump. So it's fun to talk about Trump. And basically, you have the good Trump, which supports free enterprise, which wants to lower taxes, who wants to deregulate, and who wants to bring confidence back to the people. On the other side, you have bad Trump with protectionism, racial undertones. He's an impulsive tweeter. He's went through bankruptcies. And lastly, can he do anything? As we saw yesterday, that's an issue that the market is starting to ponder. So basically, as the poet said, T.S. Eliot, in the room, the women come and go talking about Michelangelo. So we can talk all night about Brexit, about Trump, about all of these things, and we can go into detail, but it's probably not really relevant. So what is relevant? The real issues that will affect market are basically that politics are deteriorating everywhere. In France, you could have Brexit, and we all know what that means because Marine Le Pen was very clear about it. She says, France is the political heart of Europe, and the minute we leave the euro, the whole project collapses. We will know on May the 7th if there is anything there. There's Brexit going on all the time, but what is most important is that all over the world, you have more protectionism, more racism, more patriotism, and less globalization. On the economic side, you have also turmoil ahead. Jim Rogers openly is predicting a worldwide depression. You have unmanageable government and consumer debts. You've had massive money printing. You've had a mature 8-year-long economic cycle, which has lasted that long because of this huge debt injection. And I tell you, if you give me a couple of trillions, I'll throw a great party also. You have overvalued housing worldwide, overvalued bonds worldwide, overvalued stock markets worldwide. The P/E ratio on the S&P is a whopping 26 times. That is very high in terms of historical standards. You've had a fantastic 34-year bull market in bonds. This will not go on for another 34 years. The Fed announced 3 rate hikes in 2017, 3 rate hikes in 2018, and consequence, Gold would have been supposed to go down. It's going up. Why? Why? Because it's a bull market. It might be also the fact that the real rates are still low. The dollar. I went to a gold conference in Miami, and I tell you, I didn't come back with a suitcase load of jeans. The U.S. is expensive. The dollar is expensive, and it's had a huge run. So I want to give you a little feeling about this PDAC conference. There is euphoria. So it means that all the real pros are positioning themselves for a big bull gold market. So this is what's new this year in PDAC. So the attendees were up. There's a lot of talk about mergers and acquisitions. There are a lot of IPOs. There's a huge number of private placement. They tend to close quickly. They're oversubscribed. And there is a mass production of juniors. So people who observe the markets are, of course, when they see this euphoria, they're a little more cautious. So, for example, Rick Rule, who's a very smart, very savvy market analyst and a great speculator, on the day where I talked, he concluded the session, and I think his remarks were, pretty, were summing up a lot of the feelings among the people. Is that short term there was some caution. There is the PDAC curse. All the companies, they want to show great news for PDAC, and after that there's not much news. Then you have people going on vacation, and nothing happens until summer. So that's a little the sentiment. So the sentiment is a little, you see, on the one hand you have a little euphoria, on the other hand people say, well, maybe we've gone a bit too high too quickly. But this PDAC curse apparently doesn't work that well. In other terms, it is true that in a bear market, after PDAC, the stocks go down. It is less clear in a bull market, and Gwen Preston from Market Maven made the remark that in the bull markets you had more of a tendency of having a late spring rally into May. Futures traders are less optimistic, which is, from a contrarian point of view, a good sign. So let's look a little from the technical perspective. Since 2014, you have a very clearly established bull market for gold in euro. It's up 35%, and that's better than negative interest rates. By the way, there was a great news, I don't know if you saw that this morning. UBS is now going to charge on the euro, they're going to charge fees on euro accounts. So hopefully it'll help our little market. 2016, new bull market for gold in US dollar, plus 18%. And when I did my first speech here in November 25th, I tell you, I was quite depressed. My portfolio also, by the way, was depressed. I was averaging down too early. But I tried to show, a little enthusiasm and, stating the obvious, which is buy when there is blood on the street. And my topic at that time was that when you're buying such depressed value, then timing doesn't matter. Because if you have to wait 1 year, 2 years, 3 years, or 5 years, if you're going to go up, if you're going to double, triple, or go up 10 times, it doesn't really matter. So the market started to move, and March 22nd, we were here. So it was pretty obvious that we had, the start of a bull market. And here, my view was that you were to switch from seniors to intermediate to juniors, to companies coming to this conference, because smaller companies have higher growth rates and they had much lower valuations. In my last talk here in November, The message was simple. If this is a bull market, and I believe it is a bull market on gold, then the strategy is buy the dips. Now, of course, we've had already one down leg and a second huge down leg. And when I was talking was the third down leg. So, of course, here I was loading up, fully invested. And, of course, just after I spoke saying buy the dip, boom, that's how perverse the markets are, you had one more leg down. In a bull market, you are bailed out of all mistakes. So don't worry too much. It might feel uncomfortable when you're experiencing these things, as we all know, but it doesn't really matter in the long term. So today my talk is simple again. Forget the noise, enjoy the bull. In a bull market, juniors tend to outperform seniors. This is what we're seeing very clearly here since 2015. The 80 lines are bottoming. That looks pretty good. And another thing which will be very important is in this bull market, which will probably keep it alive and going for longer than we think, is that the volatility is so high that this wall of worry will keep the bull alive for quite a long time. The yearly volatility is just amazing. In 2 decades, you've had 3 depressions in our sector. If you look at monthly volatility, January to August plus 153%, August 2016 to December 2016 minus 41%. This is a near retracement of 76% of the previous increase. So upside volatility, as we all know, is fun. Downside volatility is a little different. Recently, we went up 38%, which was a nice start of the year. And again, big correction. Daily volatility. March 16 plus 8.2%. This is not one stock. This is the whole index. And so you see how difficult it is for money managers or people who manage other people's money, is that they're going to buy a gold stock and it's going to be down 35% in the next 3 weeks. It's a little difficult to explain to customers. This will keep this bull alive and kicking. So, of course, what's important is stock picking. And here are a few stocks that I mentioned on March last year. And as you can see, a lot of these companies regularly come to the SME conference, and the gains have been spectacular, much higher than the index. Why is this? Because there's a favorable bias here at this conference, because CEOs who take the trouble to come to here, it means they have the money to sustain their growth. Juniors have much higher growth rate than seniors, and the undervaluation is much more acute in this sector. These are the companies that I had mentioned specifically in March. Here again, you have nice results. So basically, you're in the right place for stock selection. A few ideas. So when you're very worried and the market is collapsing, that's a nice stock to buy, because this is quality. They have 39 million ounces. It's high grade. So of course, 10 years ago, everybody told you that they would never get permitted, and they're getting there. They will be permitted by 2018. Today, people will tell you, well, it's never going to get built because it's too far, it's too expensive, and so on. But it is a big deposit. It is quality. It will get built. Exeter Resources. This is, in terms of ounces of gold in the ground, it is the world record. You're paying $2.28 an ounce of gold in the ground. Gold is today trading around $12.50. So You see the value, you see the leverage. On top of that, they have a nice small, they've been working on a nice PEA, which looked good on 1.7 million oxide. With this small deposit, they can produce 120,000 ounces, which is pretty good. At $1,300 gold, their NPV 5% is $252 million. IRR 28%, Chile. So for someone who has a market cap of $105 million and cash in the bank of $15 million, you see that there is huge, huge leverage. Victoria Gold, they speak here very regularly. You have great investors, Tom Kaplan from Electrum and Sun Valley bought at 30 cents on April 20th, 2016. And today the price is not that much higher, so that is also a nice entry point. They have $63 million in cash. They're fully permitted. It's a shovel-ready project in the Yukon. NPV 5%, $500 million. This company will be taken out. Orca Gold, they're presenting here. Fantastic management. They've proven it. They were managing their success story, Redback Mining. Ross Beatty owns a big chunk of the shares, and it's a Lundin company. They have 1.7 million ounces of very high grade. They have huge exploration upside, and the market cap is ridiculous. We're talking about under $50 million. Why is it so cheap? Is that people don't understand politics in North Sudan. North Sudan is a place where you can build a mine and where there's huge exploration potential. So you see you're pretty far from the highs. In my next conference, I'd like to, maybe in June, I'll do something on silver, because the characteristic of silver are always really interesting. Silver always goes up more than gold in the gold bull market. So I want to give you a few examples of interesting silver stocks to buy. From 2008 to 2011, silver went up 6 times. So that's much, much more than gold. A simple way to play this, there is SHNY, CHNY. It's a 2-time leverage ETF on the silver mining index. You can buy it around here. For those who control the risk, you can put a stop under here. And who knows, that can be a really, really interesting long-term ride. The quality of the quality, Mag Silver, they present here very often. You know them. They have a joint venture with the best silver producer in the world, Fresnillo, and they are always adding to their huge new discoveries. Pan American Silver, you're buying a diversified, well-run silver company, and the thing is that this senior can eventually double production. Why? Because they have a huge asset in Argentina. The president, Ross Beatty, the founder of Pan American Silver, will make sure that the president of Argentina will authorize this thing. Alexco, they are permitted. It's a former producing mine. They have a new deal. They're working on a new deal with Silver Wheaton. Once that is done, they can go back into production. Market cap is $190 million. They need very, very little money to put this mine back into production. It would take something like 7 months. And they've made an amazing new discovery where they have a small high-grade source with 2 kilos per ton. Not 2 grams, 2 kilos. Plenty of cash. And if I'm wrong, if we have to wait some more for this bull market to confirm itself, they have a profitable environmental business, so they're cash flow positive. So as soon as they announce this deal with Silver Wheaton, this thing can fly. Great Panther, market cap $390 million. Great CEO, Bob Archer. They produce 3.8 million ounces. It's a low-cost producer in Mexico. But here again, you have, although the valuation is reasonable, you have a huge production increase, which will take place in the near future because they just made a brilliant acquisition, which will increase production by some 75%. This is in Peru. They have $56 million in cash, so this should not come with any dilution. Almaden Minerals, this is a long-term favorite of mine. Unfortunately, because the stock is just never going up as I would like to. But the market cap is still extremely low, $90 million. They have measured and indicated the equivalent of 200 million ounces, so that's about what MAG has today. They have a robust PEA with a 30% IRR at $11.50 and a low capex. So this is a very, very cheap stock, and it should have a very quick re-rating. See my frustration. But here you can buy it very, very, very cheaply. And the re-rating, which should come with their new pre-feasibility study, which will give much more confidence to the market that this thing is real. Maya Gold, this is not a recommendation because they're still looking for a new CEO, but this is a producing mine with a $30 million market cap. As soon as we know there's a good CEO there, that could be really interesting. Dolly Varden, this is an exploration play. 40 million shares outstanding, market cap $26 million. They have a resource of high grade. They're in the golden triangle of BC, and you're paying a very low $0.64 per ounce in the ground. Hecla wanted to buy it. And now they have a new CEO, ex-Orca Silver. Again here, you're not buying up here, you're buying down here. Timberline, that's a very small stock, so I'm not going to dwell on that, but they have in short, they have 2 million ounces in Nevada at a decent grade, and the market cap is $10 million. So you see there is a huge valuation discrepancy, and there are huge opportunities. Quickly, Condor Gold. This is, you can buy the stock today more or less at the same price as Ross Beatty. The structural geologists of Ross Beatty is working now for the company. They will find more ounces. It's high grade, and they have a good pre-feasibility study, 2 good PEAs. They could do a nice production, and the stock is trading for about 1/3 of what it would normally trade in Canada. Why? Because they're on the wrong stock exchange. They're quoted in London. Nobody's interested in Nicaragua. In Canada, people understand this is a good jurisdiction. Market cap under $50 million. I'll finish by a quick Brexit play. Strongbow Exploration, here also a very small cap, but Almaden owns 24%, and they will put back a huge tin mine, the South Crofty mine in England. They have the permits. They just need a dewatering permit to put the mine back into production. It's a huge mine. It's the 3rd highest grade of tin in the world, and you can get that for a measly $16 million. Here again, we're not buying at the high. It's still way down here. So ladies and gentlemen, forget the noise and enjoy the gold bull market. Thank you very much.